Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. We got a lot of stuff to cover today. We're actually going to break down the newsletter, the daily ticket newsletter that we put out this morning in reference to what we're expecting today. Obviously, Nvidia has earnings today. It's going to affect it. But what we need to pay attention to, that old adage in the market, is buy the rumors, sell the news. And is Nvidia, and quite honestly, the recent tech stock breakout, is it a breakout that should hold the bid, or is it a fake out where it's still a big bear market and you should be looking to book profits into this big move to the upside? I have an opinion on what I think is going to happen in Nvidia today. But again, something that we've been talking about and spending a lot of time on recently is I'm bearish on 2022, but I'm bullish right now because stocks are going up. I don't really care the reason. All I care is that it's going up. If and when the tape changes, my opinion, my trading will change. So as of right now, we're going up. But I do believe, I'm going to write this down. It's Wednesday, November 16th, 2022. I do believe that the market has kind of reached a point where the profitability on new swing trade longs of buying the best stocks now probably has decreased a little bit. And we're going to really break that down. We're actually going to take a look at the SPY ETF over a little bit of a bigger picture. And we're going to kind of map that out. We're also going to do a little bit of a deep dive into how I broke the market down today, and probably some quotes, some trading quotes that you're going to want to screenshot and write down. Before I forget, today on Wednesday, tonight at 6:30 Eastern, we're actually hosting an options trading webinar. You can actually learn about the webinar. Make sure you register. It's a one-time only event. Not sure we're going to actually have the replay, but make sure you click the link below the video to register. It's 6:30 p.m. tonight at 6:30 p.m. Eastern. I'd love to see you there. It's going to be a lot of fun. We're actually going over the 4 steps to creating options predictability on the profitable side of things. So stick around. Be right back. We have a ton of stuff to talk about today. I'm really excited for today. Okay, so we're actually going to just do a deep dive. We're going to go straight into the ideas. Let's see. Bob, good morning. How's it going, Bob? Good morning. Good morning. Andrew, how are you? All right. So what we want to do, let me say hello to Kim. Kim, how's it going? Don, always a pleasure. John Oakes in there with me in Discord every day, super early, no later than 6. Love to see that. All right, so what we're going to do is we're going to hop on over. We're going to take a look at the newsletter today because I think it's really important. What I want to do today is I want to break down the likelihood of profit. So we're actually going to start out. I think that there's a couple of things that I want to talk about here, specifically this one as kind of a lesson. Let me actually bring that one in a little bit more. You know, we spent a lot of time yesterday while the market and the SPY specifically was kind of dancing around near the highs up in this area over here. And you kind of get this little bit of a move here, kind of get this little bit of a move here heading into the afternoon. And this might be a little bit more on the day trading side of things, but it applies to all market conditions, quite honestly. And it really comes down to, you need to know whether or not what you're looking at right now is a pause or if it's a reversal. Now, the way that we teach that in our boot camp is we talk about it being a PCOT, which is known as a potential change of trend. Potential being the key word there. More often than not, I'm actually going to show you the quote here because this was an expensive lesson early in my trading career, which is here. Which is one of the toughest things for me to learn as a new trader back in the day is this a pause or is it reversal? Most of the time, it was a pause. So that's something you want to screenshot and write down. Just because the stock slowed down or stopped does not mean that it's a reversal. And we've seen that a lot over the last 5 weeks where stocks have rocketed higher, paused, tempting to look at it in the other direction, and then just kept going. So what does that mean? That means that you need a strategy, or more, I guess more a process would really be the better word, of determining, is it obvious and is it still valid? So we spend a lot of time talking about tape reading and that kind of stuff. Is it still valid means, is the current dominant side of the market, which we call order flow, still in play? So just going sideways is not a reason to bail out of good trades. And that's actually one of the most exciting parts of trading, is when you learn to hang on to those good ideas. Just one really good trade could make your entire month. So you got to write that down and then take action on it. That's the big thing. Now, the big thing heading into today, and we kind of see this across the board, there's a quote that I want to go over with you, and it's a quote that we actually used quite a bit on my trading floor. And I'm going to come back to the whole thing here. But where is it? I just want to make sure I find the quote. Maybe it's a little bit higher over here. Oh gosh, where is it? Break-even trades make break-even traders. So that's really the big things that we're talking about right now. It's very, very hard to set up trades right now on the long side of things that feel amazing. So I just want to walk through, because what I'm essentially walking you through right now, this is the thought process that I have after yesterday's trading, letting all the economic numbers and data unfold, let the earnings come out, let it kind of sit in my head. And now in the morning, first thing in the morning, I'm mapping out what I expect to have happen in the market today, and then how that sets up risk reward and the likelihood of earning profits on new swing trades, and what that means to my activity level and my position size. So again, I love to have, make these into kind of lessons as well as stock picks, which we're going to get into a bunch of stock picks in a second. Is you need to assess what kind of risk is the right risk right now. I know that sounds like a cliche and that kind of thing, but it really matters, because some deals, some trades are just amazing, both from it's obvious and there's likely profit potential, both of those things in the trade at the same time, versus it's obvious, but the profit potential is closer to 1-to-1, because the stocks have now, instead of this being available, they might have this much available. So really, I just want to be super clear on this right now. To me right now, the way the market's lining up, and we'll take a look at a little bit of a bigger picture of this here. This picture of the market, this picture of the SPY. So it's actually a weekly chart, and you can see how religiously it's actually been holding that level. Now, what's super interesting is we've had a lot of news come out. PPI number yesterday had the market absolutely explode to the upside. No more bullish news, right? What is the Fed going to do? Does these consecutive decreases in inflation data now change what the Fed is going to do? Do they believe that now they should stop raising interest rates, that 0.75 of a basis points? We'll know in a few weeks, right? As far as I'm concerned, even with all of that in the equation, right, a lot of that's priced in, which kind of takes it now into what we're looking at in Nvidia stocks. I want to keep bringing this back to new ideas, right? So if we take a look at Nvidia stock right now, and we know that Nvidia has earnings today, so we'll take a look at that in a second. Actually, let's do that right now. So earnings on the 16th, which is today, right? I'm pretty sure it's after hours today. Yeah, after the market closes today, right? So the share stock, the shares are down 45% this year, right? But this is what we need to consider. From the lows over here, and even we just go over here from when the market reversed on that CPI number, Nvidia at this particular point, and if we take it over here to yesterday's close, it's up 52% in basically 1 month of trading. 52% heading into earnings. Okay, now a lot of the other tech stocks, we've also talked about the NASDAQ. We broke that down a little bit. We take a look here at the QQQ and the breakdown. Clearly, we broke this longer term move to the downside. Once we go into this box and break it over here, this is really the official breakout level, right? You have the move to the downside, you break it, and then you figure, okay, that's now the box, and it's either going to continue the downside or we head up to the upside. But now we actually take a look at the most recent rally. We've had a strong 3-week rally. A couple of stocks like AMD have actually had a really nice run coming off of that low when it hit down into the 50s, right? And you can see earnings into AMD and what it's done since then. But if we take this over to NVIDIA and try and come up with the decision about whether or not NVIDIA is one of the best stocks to buy now, we have to factor in what price action happened prior to the earnings announcement and what kind of profit potential is likely and available based on what it recently did and the last place that sellers did something significant. Now, you might know where sellers did something significant is called resistance, right? By the way, keep your trading as simple as possible. Don't get all bogged down in the technical definition of support and resistance and all those kind of things. Just ask yourself, where did buyers do something significant? Where was the last place sellers did something significant? So now, if we tie that on to Nvidia and we factor in the fact that it's already rallied 52%, and the next level where sellers did something significant is not that far away. So now we're talking about a 52% rally prior to earnings. We're talking about let's say 168 to 188. So you roughly have $20 of profit potential, which again, that's nothing to sneeze at, but it's already gone 52% prior to today's announcement, and there's a really obvious level of where the resistance is. So what does that translate for me personally into a new swing trade for Nvidia, especially now that it's coming out? So we've been day trading tech stocks very aggressively. When I say aggressively, I want to put that in context. Aggressively means religiously. Aggressively means every single day. Sometimes aggressively means a little more share size and we hold a little bit longer. But a lot of these large cap tech stocks specifically have been in bearish moves. They've gotten smacked on earnings, and now they're kind of having a little bit of a rally to the upside. So if we could use like Google and Amazon and Meta and a couple of those stocks, right? Clearly bearish, clearly got hit after earnings, and now a little bit of a rally after earnings. But now we have this big move to the upside. And actually, Amazon announced some cuts recently, and then put Meta in there as well. Meta rallying off of the announcement of layoffs, right? So let's keep bringing this back to Nvidia and whether or not Nvidia is one of the best stocks to buy now. Our job as traders, when we choose to accept risk, let's just face it. Why do we put on trades in the first place? Is because we built this argument, we built all of these reasons into the trade where there's a likelihood of us earning enough profit on the trade to justify the risk. So setting that up, now again, this is what I'm doing. This is how I'm looking at the trade. You might feel differently, and that's perfectly okay. There's many, many different ways to look at this trade. Because Nvidia has already rallied 52% into earnings and has kind of a little bit of a cap on where it could potentially go, which is that 189-ish level, right? So again, just to give you a visual of this, right up into that level. For me personally, right now, I'm not looking to carry an overnight in Nvidia because of all of those reasons. I think it's amazing. I think that if I was personally long, and maybe some of you are because of the recent tech rally, I've been mostly actively on the day trading side of things, but much shorter cash flow type trades because we're still in a bigger bearish move. If you are long and get a good earnings report with that ceiling above, so in other words, they exceeded expectations, which is something we're going to talk about in a second. If they exceed expectations on top of having a 52% rally before the numbers, God bless you. And I would be more likely to be taking advantage of that big move to the upside on the earnings expectation beat than looking to hang on to that, because you have to factor in at some point the cash flows now are at the right price for future earnings, and that's where it should be. So in other words, the reason stocks go up is somebody's bidding it up because they like the future cash flows. They want to get paid that either in appreciation in the stock going up, or they're looking for dividends or something along those lines, right? But at some point when the stock rallies that hard and then has an earnings boost, at that point, you have to ask yourself, is more reward likely based on what it just recently did? The way I'm looking at the things right now and the way I'm looking at the entire market right now, I think the market needs a little bit of a timeout. I really do. I think that, and I want to break that down. I'm still bullish. I want to be clear about that. I'm going to talk about some ideas specifically in the metals and agricultural stocks as we break down the rotation into some of the ideas that are looking a little bit better right now that have reward potential. I like the long side. I like to be a buyer. It's much easier to be a buyer. But you get to a point where you want to write this down. Break-even trades make break-even traders. So you have to start to ask yourself, if I'm willing to risk $1, what are the odds? Are the odds high that I'm going to make at least 3? If I'm willing to risk 1,000, is it odds good that I'm going to make at least 3,000 to justify it, especially justifying overnight positions right now in the way that the current market is trading? We had that news yesterday about the missile strike. That's pretty big news. We also had some more political news last night. That's some pretty big news. We had the PPI data that just came out yesterday. That's some pretty big news. The market's still absorbing and digesting all of this. So basically what I want to tell you as your friend, like we're kind of really breaking this down now on really thinking through on how to run your trading business, is what kind of risk overnight is worth it for the way the market's unfolding right now. So again, if you were in my trading office in New York City, these are the kind of questions and conversations we've been having. So what does that translate into right now? That basically means that the trades that I am looking for overnight short-term cash flow from anywhere from like 3 to 7 days, again, more cash flow type trades, because I do believe the market's a little bit extended to the upside. I'm not necessarily going to call it a fake out, but I'm not looking to add new longs right now. I believe right now the earnings catalyst plays are the better trades on the board right now for overnights, because we're getting follow through. We're getting a nice pop. We saw that in Walmart yesterday. We have some retail stocks taking a hit this morning that was a big part of the news. One of them was actually down 13%. We'll take a look at that in a second. So to break down Nvidia this morning, if based on everything we just talked about, which is that 52% rally, again, I just want to give you the visual, this 52% rally and this overhead resistance where sellers came in and keep pushing this stock down. Obviously, somebody with a lot of money is saying, no, that's the right price. I don't want to bid this stock up because of the way the market is unfolding right now. And then obviously you have all the other issues with which John is actually mentioning here now, copper, and whether or not copper has increased demand, which a lot of people believe it has. Will that affect chips and getting supplies? We already know that Apple had that problem where their supply chain got cut off a little bit. So a higher opening in Nvidia today. I'm expecting profit taking, not a new trend to start. I think that's the smarter move today, and that's what likely is going to end up happening. If Nvidia disappoints and they find that it's not able to exceed what's expected, remember, it's not so much the raw numbers, it's what's expected. If they do not beat expectations by a significant statement, the stock could pull back pretty hard. So it's going to be pretty interesting. I'm not looking to short sell it, but if I was long, which I want to be clear, I'm not long overnight Nvidia because of the size of the recent rally and all the reasons that we just gave. If I was long a swing trade and we get that higher opening, I would be a little bit more aggressive with moving up my trailing stop to take advantage of the recent 52% move, the gap higher if earnings happen, and lock in those profits. So again, remember, there's all those books back there. They all have the same quote: buy the rumor, sell the news. If they exceed today, Nvidia would be a sell the news event because of how much it's already gone, and locking in that profit would be the smarter trade on that. Now, I didn't say get out immediately. I want to be super clear about this because we actually have a strategy inside of our playbook, so to speak, to use a quote from my friend Mike Bellafiore, is there's something called exhaustion. And exhaustion is actually when a stock has a pretty good amount of buying pressure over days and usually over several weeks. That basically means that somebody's building a position and then they have the end of that position they want to get rid of. They get rid of all that in one big print, and that's usually the end of that pressure. So we might see that now where this is the end of that move to the upside, especially if we get a big move to the upside. But here's the point that I want to get across. It does not mean just get out. It means move up your trailing stop. Sometimes you get what's called a bullish echo. A bullish echo means it's still obvious and it kind of just pushes a little bit further in that direction before the buying pressure kind of works its way out of the system and it starts to come back. So those are the things. So recapping that, keeping it super simple. Nvidia is already up 52% prior to the earnings. It has overhead resistance. If it opens higher after the announcement, I'd be moving up my trailing stop loss, giving it some more room to go, but protecting myself on the downside, which that's actually kind of an important thing to discuss right now as well. Easily, one of the biggest challenges that new members have coming into our community is understanding how to book profitable trades. And the mistake that a lot of people make is they cut their profits short by guessing a top. So what I just explained to you is the opposite of that. Big winning trades should get taken out on the way down, not on the way up. Because if you get taken out on the way up, you're essentially saying, I'm guessing this is the top. And that's not a good thing to do because nobody knows what the top is. You want to give it a chance to breathe a little bit, put your trailing stop in, you let it breathe a little bit, put your trailing stop in, and it'll keep moving. But eventually it'll pull back far enough where you're like, okay, it's done. I'm out of here. We in our system, in the New York method, we actually have something called the profit maximizer. And the profit maximizer is a very structured way of holding on to winning trades. So I just want to give you that little bit of trading insight, so to speak. Big winning trades get taken out on the way down, not on the way up. So you need to come up with some sort of system that does that for you to manage trailing stop losses on a profitable trade. Easily one of the biggest mistakes that new traders make or are carrying into our community when they come in is trying to pick a top or trying to pick a bottom. Don't do that. There's no reason for it. Let your stop. If we were kind of joking around about this on our coaching call the other day, Andrew Robledo and Carlos and a couple of other people had some really good weeks. Actually, Rad actually had a $3,000 week last week. And we were talking about the system or the method of how and when to hold on to some of those winning trades. Remember this, and this is going to be a shocking statement. I want to say this very clearly. It's not, if you're struggling right now and you're not earning that $5,000 or $10,000 per month that you know is inside of you and you just can't figure out why, it's not you're losing trades unless you're completely reckless and you don't have any discipline on the downside. But let's say that's not you. Let's say you're like, okay, I understand. Stop losses are a part of the business, but you still can't get profitable. This means that your winning trades are what's holding you back. And that simply means you need to develop a system. Like our system is the New York method, and we have ways of using market internals, sector rotation, volume, tape reading, order flow. Like there's pieces to the puzzle where we're like, no, don't touch the keyboard. Leave it alone. Stop. You know, like we used to joke around in my office in New York City. We'd unplug the keyboard. You have a great trade. If you touch your keyboard, I'm pulling it out of your computer. You need to learn how to recognize the difference in market conditions where, wow, everything is amazing. Let the stock breathe and make more because more is on the table, versus two other unique situations like we have right now where the upside potential is kind of diminishing. So even though it's obvious, the upside potential is a little bit less likely. So the risk reward is smaller. So we got to protect our capital a little bit there and maybe do what we call trading for cash flow. The other situation is where nothing is going on and it's obvious, but you're trading anyway, where not only is there not an edge, but there's also nothing to do, but you're looking for spots. You kind of justify it when you could stay away from those non-obvious crappy situations and recognize when more is on the table and hold longer, or recognize when it's obvious, but I really shouldn't take that much risk and maybe I should book profits a little quicker. When you understand those three different market conditions, everything changes. Everything. And by the way, this is what we do in our private community all day, every day. It's literally what I'm doing on the broadcast. It's literally what we're doing in our coaching calls. I got news for you. Trading's not that challenging, but you need to know what to look for, and then you need to use it. Knowing what to look for and knowing how to use it is not the same thing. And you probably know that already. You know that chart reading is not trading. When you separate those two and you realize that making money is different than identifying bull flags or bear flags or moving average crossovers, there's a giant difference. There's a mental aspect of it, of having the guts to say, I'm not booking this $1,000 profit because there's no reason other than I got an itchy trigger finger. These are the different things that will elevate you to become somebody who expects to make money, not because you will every day, but because you're doing the right thing every day. I can't stress this enough. You don't need to predict to make money. You need to know what's probably going to happen and what you definitely plan to do. Consistency comes from doing the right thing over and over again, not from predicting what's going to happen next. So that's a whole big breakdown. So I want to just break down a little bit more how I'm looking at the market today, and then we're going to get into some stock picks, and then we're actually going to get into sector rotation for today. You could actually see that the boat is kind of leaning all on the bullish side of things today. All right. So if we break this down a little bit more, and I just want to make sure that we cover everything that's going on here and how I'm looking at the market. So the market continues higher, right? A bit of economic data, which was yesterday's PPI report. If you didn't happen to see what that meant yesterday when that came out, I just want to give you a little bit of a visual why everybody was spending so much time talking about it yesterday. This is when the number came out yesterday. So that is a pretty significant thing, right? But what's kind of interesting is we're kind of like right where it was prior to that number coming out again yesterday. Obviously, we had the news yesterday, so let's break down what that is, right? Bullish gap that once again did two things. So I'm thinking things through. What kind of risk should I be taking? So this is really what you want to start to think this way. It's like, what kind of risk is the right risk right now? Remember, your number one job in the stock market is PPC. Protect precious capital while you're learning to improve your skills as a trader, which is what I'm walking you through right now. Essentially what I'm doing, what I give into our community every day, is I am helping both our experienced members, but especially our new members, how to think through what's available today, what's available this week, what's available this month, and where is the greatest likelihood of me making money. These are the kind of things that you really, it's not hard. It's really just if I'm going to take risk, how do I know what the best idea is right now? These are the kind of things that hopefully you're learning from me while we're here. And by the way, if this stuff is new to you, do me a favor, click subscribe. This way you make sure you get updates, you get more, and also let me know that you're enjoying this kind of stuff. So let's keep walking through the analysis heading into today. All right. Caught the shorts off guard since the previous day closed at the low. So now we're actually building into the market, what the market did yesterday and how that sets up. So if we go into the previous day and we look at where the market closed, we actually closed on the lows heading into the PPI number. So you would expect after this reversal that we'd at least push down, but no, it wasn't priced in. We actually got a big move. Let's keep moving forward, right? So it did two things. Caught the shorts off guard because the previous day closed on the lows. And second, the three majors held above the previous day's high for most of the day, supported by most sectors and the market internal. So what are we doing right now? We're looking at the SPY. We're looking at the NASDAQ. We're looking at the Dow. Very quickly, where are they? Well, they were hovering above the previous day's high for most of the day, supported by most sectors and the market internals. So if what we do is new to you, essentially what I'm doing is I'm saying, if I'm going to take risk, if I'm looking to buy, if I'm looking to carry overnight, I want to put on more trades, I want to make some money, I want to go on a vacation, right? How many reasons can I put into that trade where I'm comfortable with putting my money in harm's way? We just talked about it. The three majors were strong. The NASDAQ, the SPY, and the S&P, they were hovering above the previous day's high and stayed there. Next step, where is sector rotation? So now we're going a little bit deeper from the three majors and we're saying, okay, is there money flowing into the market across the board? Across the board means the major sectors. So let's take a look at exactly what that looks like, right? Which is right here. So heading into today, you can see where we are over the last 5 days. Only energy is kind of petering out a little bit. And you can see where we were yesterday and more importantly, over the last 4 weeks. So what we're doing is we're saying to ourselves, okay, why else should I accept risk? And the sectors were strong as well. And the PPI number came out, was bullish. And some earnings came out on Walmart, also bullish. So now we're stacking those reasons to be like, you know what, maybe I want to dip my toes in here. Now you got to go to the last piece of the equation. What kind of reward potentials available if I choose to accept risk? And now that's how I'm going to break this down a little bit further. Okay. So if we keep going and break this down, today it took a missile attack in Poland to sink the market, which eventually recovered as more information unfolded. Okay. Now here's the news on that. The current bullish run creates excitement and hope, but there's simply too many stocks that have not paused for 6 weeks. So what am I assessing right here? Okay. And specifically industrials, financials, and the recent spurt in semiconductor stocks. So it's getting back into AMD and Nvidia. So essentially what I'm saying here is stocks have not paused for 6 weeks. And just to give you a little bit of a context on this, and specifically on the industrial stocks and some large cap stocks, this is IBM for the last 6 weeks, 5 to 6 weeks into this big resistance level. We also have General Electric, which has not paused for 6 weeks, coming into a level where we broke down in a big way and we're sitting right at that level. We also have Goldman Sachs, has not taken a pause for 6 weeks, also coming into a level where sellers did something significant. JP Morgan, very, very similar, has not paused for 6 weeks. So let's keep breaking down. This is the thought process of how I'm going into the day and my expectation for follow through and what kind of risk I'm willing to take. All right. So specifically industrials and financials and the recent spurt in semiconductor stocks have not paused for 6 weeks. I'm finding some ideas near an optimal entry. So for example, just to give you an idea of something we're keeping an eye on today, which is FSLR. We're looking for it to finally break out of this. So that's actually still near an optimal entry, right? So also many long-term bearish trend lines. So again, taking that back into what we just looked at in the SPY, specifically, we don't have a lot of room back to the upside right now. And you can see how religiously this is holding this move to the downside, okay? Booking swings into momentum is the play for me right now until I see a reasonable pause before the next push. So what am I assessing right now? I'm assessing profit potential on a new trade for across most stocks until I see a reasonable pause before I put on and look for the next push. So the obvious question right now is, what's a reasonable pause? We generally want the stock to go sideways or pull back a little bit for 2 to 4 days, because if a strong stock moves to the upside, like we had in DuPont DD, you need the stock to catch up a little bit to justify new reward potential, because the risk is worth it. So what we're kind of looking at right now in the market is pick a side and pick a spot. Pick a side is obvious. Picking a spot means reward potential is worth the risk. And we're kind of getting to that point where I think a week from now, we'll be like, of course the market reversed. It didn't stop for 6 weeks. So what that means is we're moving way up the top of the pyramid right now, the power pyramid, and we're very stock and industry group specific. So again, the best stocks that I'm looking to buy right now in solar stocks have room to go. Metals and miners have room to go. John before mentioned copper. That's another area, right? So we got precious metals, gold, copper, aluminum, steel. Those are the stocks right now. You can look them up. Those are the stocks that have the greatest reward potential right now, because they're still at or near the start of a new move, at a pause, and have room to go. So copper stocks, steel stocks, aluminum stocks, and gold stocks. And even working a little bit over, sticking with that basic material, there's some agricultural stocks. So again, this is the way we break everything down. We're broken it all the way down into the stock market power pyramid, and we're building that argument for the trade. So you can see the market sector rotation, which is what we just showed you over here, right? Where is money flowing into that market? Then we break it down a little bit further. We go into industry groups, and then we get into some specific stock picks. So the reward potential today, don't get me wrong, I'm looking long. I want to be a buyer of stocks because the tape is going up, which it is. That's very hard to disagree with right now. We're making higher lows and we're making higher highs. This is the concern here, is how much profit potential is on the table in exchange for the risk that we need to take. All right. So I'm looking long because the tape is going up, but a hard look at likely risk reward on new swing trades is getting closer to 1-to-1. So remember this. Break-even trades of 1-to-1 make you a break-even trader. Earnings catalyst calendar trades are what to be focusing on now. Not sure if the SPY will hit this level, but that downtrend line is one to be aware of, which is what we're looking at over here. So what does all of that mean? Actually, Franz is taking a look at real estate. Let me just pop this one in. Franz, thank you for that. There is one actually that I have on my radar right now, which is this guy right here. Thank you for this, Franz. Right here, SPG finally got through this level. And if we zoom out just a little bit more, you can see that it has some pretty solid reward potential as long as it stays above this 115 level. Hey, Jason, good morning. How's it going? Love that hat, man. So anyway, that's how we're breaking down the market today. Hopefully one of the biggest things that I got across to you today, as we're looking at the tech breakout, the recent surge in semiconductor stocks, Micron, TSM, a bunch of those stocks, right? Now we're assessing whether or not reward potential is worth taking the risk. That's a big thing for a lot of people to learn. So based on what we looked at Nvidia, that 52% rally heading into earnings, that big resistance level coming up, swing trade opportunities if you already own Nvidia for a swing trade. We're not talking about long-term investing. We're not talking about where it's going to be 5 years from now. We're talking about if after the earnings announcement you get a gap up, which I do not believe is going to be likely based on buy the rumor, sell the news and how much it's already rallied. I think it's going to be really hard. Even though the expectations have been lowered, they're really going to have to blow that number away to not only gap up, but stay there. That's the big thing. Even if it gaps up, great. Move up that trailing stop like we talked about before, but does it stay there? That's going to be the big question with that big overhead resistance. So pick a side, pick a spot, and manage your risk. That's going to be the big thing. Is the reward likely for what we're about to do. We just gave you a whole bunch of ideas. We broke it down into industry sectors and we analyzed the market and the likely profit potential of where the market can go. The breakout is real, but can it stay? That's the big thing. The reward potential is diminishing. We might need the stock to pause. I'm going to show you. We actually got a good question. I'm going to show you what a good pause looks like, just so we have some kind of a visual. And it's this. After you get a big move like that and you pull back for 3 days, that's what sets up this. And then you pause for 3 days. That's what sets up this. And now we're pausing again. So that's visually what we're looking for. All right. If this stuff helps you, gosh, I want you to know how much I appreciate you being here with me. I hope I'm leveling your game up, or at least leveling up how you think a little bit. Definitely click that subscribe. If we're helping you, give me a thumbs up. If some valuable stuff here and you make some money off what we're talking about, don't forget tonight, options trading webinar. We're going to go over the 4 steps to option trades that lead to predictable profitability. Click that link below the video. I'd love to see you on that webinar today as well. Have an awesome day, everybody. Thanks so much for joining me. I really, really appreciate it. Take care now.